Good afternoon, everybody. I'm Chris Gilmore, WPTV anchor, joining you guys again today for another Tax Tuesday here on the WPTV Facebook page and our other streaming media. I'm joined by Chantel Brown from Tax Solutions, and she's going to talk to us about some of the questions that have been popping up since we last met during our previous Tax Tuesdays. It is March 2nd, which means that deadline is creeping closer. So definitely something you want to think about. Thanks for joining us today, Ms. Brown.
Not a problem. Thank you for having me.
Yeah. So how have you been in the past week? Busy? Lots of customers?
Yes. Very busy, lots of customers, lots of people calling in because there's still a lot of uncertainty with everything that's going on this tax season. So there's a lot of people who definitely have a lot of questions. So we are here to be a resource and to help in whatever way that or capacity that we can to make sure that our community is aware to the best of our knowledge of what's going on in the tax world these days.
Yes, and Ms. Brown, we're not alone on this stream. We have our viewers here joining us. I see some people saying hello already.
Yes, hello.
Dylan, hey, good afternoon to you. If you're joining us during your lunch break, we want to encourage you guys to be active in the comment section because you're going to guide the conversation today. We're going to try and get as many questions that are tax related answered as we can. And as you go ahead and do that, who better to answer them than Ms. Brown? We also have some questions that we've been receiving during the past week, and I just want to go ahead and get the conversation started. But again, feel free to chime in if you guys have any other input. The first question, do I owe taxes if I took money out of my 401k to help during the pandemic? That's a good one.
That is a very good question, Chris. So the answer to that question is yes. So if you have a 401k that is what is called a qualified account, and that means that you put money in it pre-tax, then yes, whenever you make a withdrawal, it does cause a taxable event. However, what is happening this year is where you normally are charged a 10% penalty if you are pulling those funds out prior to reaching the age of, I believe it's 59 and a half. You pay your regular tax plus 10% generally on top of that as a penalty. This year there is a tax form or a tax credit that is allowing us is you file form 8915E. And by filing that form, it is allowing us to, I guess, if you will, bypass having to pay those taxes on pulling those funds out this year. So generally what happens is that it's not that you're not going to have to pay the taxes. You just don't have to pay it now. So it pretty much defers it, I believe, for about 3 years. So you
Is
just
that
don't have to pay that at this time.
is
Say
that
that
something
again.
new this year or something that's
So
always been around?
So it's something that pretty much always is around, but normally it's only effective if there has been declared like a national emergency or a national disaster. So you normally would see that form when there's like a major hurricane that happens in the area that caused a lot of destruction and it was nationally declared a disaster area. If you live in that area, then you would have had that same opportunity. So it's something that is around, but not that you can just use at all times. It's only available during times when there is a national disaster declared for a certain area. And through the pandemic, that has pretty much been declared over the United States of
Yeah,
America.
I think
So
a pandemic qualifies. So there's that
yes,
89
absolutely.
form that Ms. Brown was talking about. You can go ahead and look that up to defer that tax on your 401k. We have a question from one of the first people in our stream, Anna. Anna says that her tax is still being processed with the tax topic 152. What is that? And a lot of people, she says, have been waking up to that message. Tax topic 152.
So that I'm not exactly sure because sometimes what I can say is that means that your return is possibly going through a different level of verification, but exactly what that different level of verification is, I could not answer that because it could be a variety of things. So it could mean that you were randomly chosen to do ID verify. Where the IRS is just trying to verify that you're going to get a letter in the mail saying that you needed to verify your identity. It could mean that that they're just pending. So they're just trying to make sure that the information, like for instance, the withholdings on the tax return is accurate. So it could mean a number of things. And sometimes you may get a letter, sometimes you may not. It really just depends on what is going on with that individual return at that time.
Okay. This is a question that we've seen come up a lot. This one coming from Claudine Tollinger. Thank you for joining us, Colleen. She says, if you have an 18-year-old, soon to be 19-year-old, and you claim them on your taxes this time, will they qualify for the upcoming stimulus? It's that interesting age from
Right.
18 to 19.
So that is right. That is something that is not an answer that I can give you directly. What I do know is that the new package, from my understanding, is supposed to include all. So that includes the taxpayers as well as the dependents, no matter the age. But because that has not been signed as of to date, I could not say that it does, because normally I think under the last stimulus checks, I think it stopped at kids at the age of 16 or 17. So based on what I'm hearing, they're proposing to pay the $1,400 per person, but that it hasn't been approved yet. So we're not sure.
Okay, gotcha. Tara McLaughlin, she filed on February 1st, accepted on February 11th. Why am I still waiting on my taxes? That's a long time to wait.
Right. Well, technically, the IRS has up to 21 days to process a tax return. If you filed on February 1st, the IRS did not officially open for business to accept returns until February the 12th. What they did do, I think around February the 9th, is they began to open up what we call hub testing. So it's a great possibility. So in reality, you really only been waiting since the 12th, because that was the official day for the IRS to open. And then based off of that, they have up to 21 days to process the return, or to let you know that there's something going on and they need more information or more time to process it.
We have a question from Sarah, who's trying to get in the process of getting her return completed. She says she hasn't received her 1099-G form yet, so she can't finish filing. How does she get that form? 1099-G.
So the 1099-G form is the form from, I'm assuming she's specifically speaking about the form for unemployment. You should be able to log into, if it's Florida, into the Florida DEO website, where you would normally claim your weeks or open your case for unemployment, and you should see the link there to click for your form 1099-G.
Yep.
But you would just log right into your unemployment portal that you would normally use to claim your weeks in order to find that form.
There you go. That's a form we've seen a lot over these past few weeks.
Oh, and if I can add, if you don't see it there, because one of my clients, we had that issue where it was not there, what she did was call the unemployment office, and I know that is difficult to get through to them, but she was very persistent. She got someone on the phone who was able to provide her with the information that was needed off of the form so that she could proceed to file her taxes.
Perfect. Important. Keep the questions coming, guys. We're going to continue to monitor them. In the meantime, here's a question we have for you. If I make a charitable contribution last year, if I made one, can I deduct that from my taxes? Charitable contributions, are there any tax credits available for that?
So with the charitable contributions, what's going on? So typically, under the normal IRS rules, you would have to have enough other itemized deductions in order to be able to deduct your charitable donations. So simply meaning that if you're a single taxpayer, your standard deduction is $12,400. If your only itemized deduction is charitable donations, then your charitable contributions would need to be greater than that $12,400 in order for you to be able to deduct it. But if you had other itemized expenses, then it would really just go along with adding it totally up to be greater than that amount. This year, what the IRS has allowed us to do is we are able to, along with your standard deduction, take a limit or a maximum of $300 of any charitable contributions that you made and deduct that without you itemizing. But the maximum amount, if you're not going to itemize or if you don't have enough expenses to itemize, is going to be $300 for charitable contributions for this tax season. I'm sorry, for this tax year.
Good to know. All right, we're continuing to monitor the comments. Let's take Valerie. She says, is there still a free site for doing your taxes?
Absolutely, Valerie. You can go directly to irs.gov/free file, I believe is what it is. And you will be able to file. There's like various sites on there that you can choose which one you want to use in order to file your taxes. I know that there is a maximum of income that you can make, but you will be able to see what that is based on which site you choose to file your taxes on.
Yes, I see Sarah says TurboTax is free for filing. I've used TurboTax in the past, but as your situation gets more complicated, as we talked about in the past, you're definitely going to want to at least consult a professional before you go,
Absolutely.
because you can get in a lot of sticky ground there. Saya
Right.
is asking, I filed taxes and I included the $600 stimulus since I hadn't received it. And a few days after I e-filed, I received the $600 stimulus check. Should I file an amendment for the 1040X or wait for them to tell me?
So I typically do not advise filing a Form 1040X if the original tax return has not been filed. My understanding is if you filed your taxes and then you receive the stimulus check, that it may take a little longer in processing for you because they are, based on my understanding, the IRS is supposed to correct it on their side where your refund should be minus the $600. But I would definitely not advise you file an amended return until the original return is processed or until you are advised by the IRS that that's what you need to do. Because what you don't want to do is file an amended return before the original return was processed, and then it causes confusion, and then now it's taking you months before you're able to get that rectified.
Right. And there's the 1040X form. That's the amendment. So when is the right situation to use that form?
So if you filed a tax return and you eliminated putting something on your tax return, so for instance, um, a lot of W-2s have been a little slowful this year in coming, and I don't know if it was because of mail or whatever. So I have clients who have filed their taxes and then they got a W-2 in the mail. So that would, if you didn't include all of your income, then that would be a time for you to, once your original return processed, then that will be a time for you to file an amended return. Um, the other thing was in the situation of the question that was asked, if the IRS actually pays the refund out, it is a possibility that they would request that she do an amended return so that she can adjust the return to take the additional $600 off.
Perfect. Thank you for that. Just getting a lot of thank yous too.
Oh.
Nate is asking, I know tons of people who have gotten their returns back already and inevitably shows accepted February 10th, but nothing. It's a simple return. Why haven't I gotten an answer?
So again, Nate, that is really a relative question based on your circumstances. The way that the IRS works is when a tax return is filed, they have multiple channels in which like the different returns go through. Some of them go through simple processing and it's automated. The computer is able to verify to the best of its ability information and returns are paid quickly. Some of them go through a more rigorous process where it takes a little longer. So just because you haven't gotten it yet, really, again, because they do technically have 21 days from the day that it was accepted in order to process the return, you're still within normal processing time.
Okay, so don't necessarily be alarmed yet.
Correct. Correct.
21 days. You touched on this earlier, Ms. Brown, when we were talking about charitable donations in terms of deductions, but what's best, to itemize or just to take the standard deduction?
So that's going to be relative to each individual situation. So generally, the people who get the best out of itemizing their deductions is going to be someone who owns a home and they are currently paying um, mortgage interest as well as their taxes, their real estate taxes, because you're going to get like with mortgage interest because at some point the rates were kind of up there. You have people who are going to, some people would have maybe $12,000 just in mortgage interest. So if you had mortgage interest, real estate taxes, again, if you have charitable donations, if you bought any large ticket items where you had to pay sales tax, Sales tax is another way that you can add to your itemized deductions. Medical expenses can be deducted that you pay in the tax year. So that's going to include your premiums, any co-pays that you have, any out-of-pocket expenses that you have, the prescriptions um, that you have, if you have to have any procedures, any testing, glasses, if you use any type of medical aid devices that that you need every day in order for your survival, that you have to pay out of pocket for. So these are out of pocket expenses. And what happens with the medical is 7.5%, I think it went back down to 7.5. It has to be greater than 7.5% of your adjusted gross income. And anything that's over that amount is what you'll be able to deduct. So it really just depends. What I like to do is I have clients in that situation. I always weigh the best because you want to do whichever is going to give you the best tax break. So sometimes I have clients who they have all of those things, but it does not equate to be higher than their standard deduction. So I advise them like their best option is the standard deduction. And then there are some cases where they're in a better situation to itemize. So it really is dependent upon the individual situation.
Okay. Like you said, case by case.
Correct.
Lena has a question. She has a son who is 26 years old, always filed for head of household. What's the age cutoff? If I file as head of household, can he file his own individual tax return?
Okay, so Lena, the answer to your question is because of your son's age, so the cutoff technically is going to be the age of 23 when you're filing head of household, right? And that's age of 23. If they are a full-time student, then you would still qualify for all the credits such as earned income credit based on your income. If he is the age of 26, the only way that you can file him as a dependent and claim head of household is if his income was lower than $4,000. I think it's $4,050 for the year. He lived in your home and you provided for more than for more than 6 months out of the year, and you provided greater than 50% of his care. You can claim him as head of household eternally because he's your child, as long as he falls within those scenarios. If his income was below that amount and but he had taxes withheld, then absolutely he could still file his own taxes. But if his income was greater than $4,050, then even if everything else is the same and he lived with you for greater than 6 months, you paid more than 50% of his cost of living, then technically he cannot be your dependent unless he is considered to be permanently and totally disabled.
Got it.
So I hope I answered your question.
Another one. I like you guys being active. Keep it coming. Daniela says, my husband received 1 week of unemployment of 217 or 270. She hasn't received a 1099-G form and tried to find one on their website, but there's no form available. Should we wait to file taxes?
Again, what I would do if you can't find it on their website, I have a client who just did it maybe a week or so ago where she was able to get in contact with someone and received all of the relevant information that was needed, that was on the form, so that she can go ahead and file her taxes. And then she also requested that they send her one in the mail so that she could have a copy for her files.
Okay. I see Lena asking some follow-ups if he can still file his own tax return. From what I understood, just listening, and correct me if I'm wrong with Ms. Brown, if he is making over $4,050, then yes, he will need to file his own tax return, even if he's living at home and we're providing over 50% or more of his care. So it depends on the situation. If he's working or if the situation is that he's disabled, if you want to reach out to Ms. Brown, she's available outside the call if you want to talk to her about your particular situation. So look for her contact information at the end of this stream. But thank you for your question. Matt has another question. If I already filed and received my return and then the child tax credit raises with this, when do I receive the new child tax credit?
Okay, so that's actually a really good question. I kind of had one of my clients ask me that same exact question the other day. So the new child tax credit,
and that was Bill, not Bull.
Bull. Oh,
I
I'm sorry.
I skipped over that word because I thought he was being colorful with his language. Okay,
Oh,
I
so
got you.
Bill, so what happens is that credit, the increase will be effective for 2021. And currently we're filing 2020 taxes. So with that, everything that's going on with that child tax credit, it would be effective for for your 2021 tax return. If that does go through based on what is the way that it's being written, the way that it is written, if that passes, they're saying that you will have the option to take a monthly distribution between the months of July of this year and December of this year, or a monthly distribution. So they will determine like per month, whatever. So if you qualified for the $3,000, they will divide that by 12 per child and then send you a monthly check. Or you would have the option to just wait until you file your 2021 taxes. But that new child tax credit law that they are, that's in the works right now, that is not at all going to affect your 2020 taxes, which that's what we're filing now.
Okay, so look for that next year. Let's see what we have. How about Eve? Eve says she's a single person, not a property owner. I'm guessing that's what she means. Is it true that the minimum taxes that I get in a return will be $1,200?
I don't even know how to answer that question. So I'm gonna say no, that's not true, because there's like really not a minimum tax return that you're going to receive, because your tax return is definitely going to be based on your filing status. It's going to be based on largely on your income, on any withholdings that you have. So what I can say is, if you are a single taxpayer with no dependents, if you are older than 26 years old and your income is below, I want to say it's $13,000, and don't quote me on that, but I can't remember, but I think it's around $13,000, then you could possibly qualify for earned income credit as a single person with no dependents. And the maximum earned income credit you can qualify for is $529. But again, that's going to be based on your income. So it's not anything saying that you're going to get $1,200 just because you're a single taxpayer. No.
Okay, Matt has a follow-up. He's closely following. What if we wait to file taxes until the child tax credit bill passes? Would we receive it with our 2020 taxes?
No, because that's a tax law for 2021. So that tax law. So right now, there are a few exceptions because of the pandemic. So they have made some exceptions to, what we're doing with taxes. However, the child tax credit is still, for your 2020 taxes, is still going to be up to $2,400, with up to $1,400 of that being refundable.
Got it. Okay. Are there, this one's from Denise, are there additional tax credits for those affected by the pandemic?
So yes, so not necessarily just credits, but there are additional things that could help during the pandemic as it relates to taxes. So for instance, we know that a lot of people didn't work as much in 2020 as they did in 2019. So what we are being allowed to do is this called, there's a look back credit. The look back credit allows us to use your 2019 taxes to determine your earned income credit if it will have yielded you a higher amount. So for instance, if you only made $4,000 during earned income during 2020, but you made $12,000 during 2019 and you have dependents, then we can use the look back credit to utilize that $12,000 from 2019 in order to get you a higher refund. The other thing is, if you are self-employed, there is the child and family, I can never say it right, but it's like it's form 7202 that will allow us to use a credit to give you a credit back for it, and that's for self-employed people, because employed people, if they had to take sick leave, then a lot of times their employer paid them for that. But if you're self-employed, then you didn't get that benefit. So there is the form. Yes, it's the credit for sick leave and family leave. Thank you, because I always mess that up. But if you are self-employed, then you can file that form. That is also a very beneficial to self-employed individuals who do have dependents below the age of 18.
All right, there you have it, 7202, in case you're looking for it. Here's an interesting one from Pamela. She says, if I already filed, but I haven't received my $600 stimulus because they sent it to a closed account, how will I apply to receive it? Do I need to amend it?
So yes, but again, what I would do is wait for your original return to pay out and then do an amendment for your 2020 taxes so that you can capture that stimulus check. And the good thing about it is prior to last year, like mid-year last year, all amendments had to be mailed in. They are now allowing us to e-file 2019 as well as 2020 amendments. So I would definitely wait until the current year return processes fully and you get that refund, and then file an amendment. Absolutely.
Okay. And when are returns being issued? The all important question.
So if we're speaking about the refunds, they already started issuing refunds, I believe, officially last Monday. So if you had our income credit, additional child tax credit, or the American Opportunity Tax Credit, which is an education credit, they started officially sending those returns out. I believe it was last Monday.
Okay. The follow up from Zay, he said, I'm over the standard 21 days at this point. How can I get information on that?
So I would say if you are over the 21 days based off of February the 12th, because remember, even if your return got accepted before the 12th of February, February 12th was the official start date. So from 21 days from February 12th, if you are past that, then I would definitely recommend that you reach out to the IRS to find out if there's anything additional that you possibly need. And then make sure that the other thing we have to do is make sure that the addresses are correct. So if you have an address this year that may be different from your address from last year, then I would definitely call the IRS to make sure that they have your updated information, because that way that if they're sending any notifications out, that you're sure that it's coming to the right location. But if you're from February 21st to the day, if you're over your 21 days, then I would definitely reach out to the IRS just to find out if there's anything additional that you need to do.
There you go. And we put up the irs.gov website for you. This is a question for you from Geo. My wife's ITN expired last year. And last year I filed married, filing separately, and she did not file at all. She didn't have any income. If I can get her ITN renewed quickly, can I amend the tax return from last year to increase my threshold to receive additional money back from last year's return?
Okay. So that's like a difficult one because she let it. So the first thing is you can't let it expire, right? So the I-10 is the individual tax identification number, for those who are wondering what that means. And what I would say is, yes, you can. You are still, if it was from last year, you are still within the time frame because you have 3 years to change from married filing separately to married filing jointly. But what you may have to do is have her I-10 renewed first, because it has to be an active I-10 for you to do that, or it has to be a new issue. So you can definitely do that. But what I would say is you may want to call the IRS and schedule an appointment where she can go into the local office so that she can have that I-10 renewed. And then, yes, you can file an amended return in order to add her on there. And depending on what your income is, going to married filing jointly could definitely yield you back a higher refund. But again, it's going to depend on other varying circumstances.
Okay, here, let's take Victoria's question. She asked a question earlier. She said, how long do you have to file for a business loss?
So technically, you have 3 years to file your taxes from the original due date. So I guess that would be it. But I would say, depending on your business structure, you're going to want to file those in a timely fashion, because depending on your business structure, if you file the tax returns late, even if there was no taxes due and you are taking a loss, you could be penalized heavily, which could cause you to owe taxes anyway. So I would say you have 3 years, but depending on how your business is structured, or designated to pay taxes, should I say, is you're going to want to do that as quickly as possible so that you can avoid any potential penalties, because different business structures have different penalties for late filing. And that's even if you otherwise would not have tax due.
Okay. Eva has another question. Her daughter's 23, a bartender, and of course, affected by the pandemic. And when she finally started working, she contracted COVID-19. Will she have an extra return because of that?
No. So the only way that she could possibly get, like, if you're saying like if she can get a credit or something for that, is if as a bartender she was like an independent contractor, then she would qualify to file Form 7202, where she can say where she had to isolate herself or whatever the situation was for whatever how many days, and it's really up to 10 days that the credit will allow for. But if she was not self-employed or an independent contractor as a bartender, there is no credits for people who unfortunately who did or were diagnosed with the COVID-19.
Okay. Well, I think that'll be our last question for this session. And you can self-plug yourself here a little bit, Ms. Brown. I saw somebody asking how they can reach you after this stream ends and going on into the lead up to April 15th.
Okay. So there are several ways. You can definitely give us a call here at the office. Our contact number here at the office is 561-424-6600. Again, it's 561-424-6600. Or you can go to our website, which is A Class Tax Solutions with an S at the end .net. And that's aclasstaxsolutions.net. And then you can go to contact us on that website, and it'll allow you to send us an email, or you will be able to schedule a free consultation on that website.
Is that number we have up there right for you, Ms. Brown?
We're missing a 6, so it should be 561-424-6600.
Okay, there you have
There
it.
it is. Correct.
We're quick on the draw here. All right, well, guys, thank you so much for taking some time out of your lunch break. I want to give you an important update, though. We will not be doing Tax Tuesday next Tuesday. We want to give you guys a little break to breathe and assess everything as we get closer to tax filings. But we will be bringing it back as we get closer to tax filings. That's April 15th. So look out for more Tax Tuesdays toward the end of this month. Of course, we'll send notifications through our WPTV Facebook page and on air, so you can go ahead and get some advance notice. But we love hearing from you. Thank you so much for joining us. If you have any further questions, feel free to message us on our Facebook page at WPTV, or you can email news@WPTV.com. It's been real, guys. Thank you so much. And thank you, Ms. Brown, for taking some time out of your day to answer these questions.
Not a problem. It was my pleasure. Thank you for the opportunity to be a resource to the community. Thank you.